CGTN, China Global Television Network.
According to a World Bank report, South Africa is the most unequal country in the world, where 10% of the population owns over 80% of the country's wealth. However, inequality is not isolated to South Africa alone. Oxfam reports that Africa is the second most unequal continent in the world and home to 7 of the most unequal countries. While the richest Africans are getting richer, extreme poverty on the continent is rising. This week on the show, we examine the causes of economic inequality in Africa and ways of bridging the divide. I'm Beatrice Marshall. Welcome to Talk Africa. A recent rise in the cost of living globally has exposed just how poor some families in Africa have become. Before we begin our discussion, let's hear what some from across the continent have to say about this glaring inequality.
So do you feel your country is equal or unequal? If not, why?
Country is very unequal. Kenya is the most unequal country, one of the most unequal countries in the world. And when Kenyans are dying because of droughts, we are surprised the President of the Republic has not appealed to the private sector to contribute their part so that we don't have, you have 4 million people. How much is money generated by Safaricom and the other farms? We don't need to have hunger when we have so many people having so much.
At the moment, I think it's very unequal. It was unequal 25 years ago. I think a lot of steps have been taken from a BEE perspective to try and make it equal. But quite frankly, I don't think it's worked to a large extent. A very small percentage of the South African population owns a very large percentage of the wealth. I don't think that's going to change in a hurry. I feel that a large part of the inequality is definitely a historical racial inequality. But I believe that our government has had 25 years to try and fix that, and I think they've attempted to fix it in the wrong way.
I don't think it's equal. I feel like the margin between the rich and the poor is very wide. Yeah, so the rich are getting richer, the poor are getting poorer. I don't think the poor have a lot of access to opportunities that would enable them to get rich. I don't think it's equal. It's very unequal.
I think the best way the government can do is to create more jobs to the peoples so that there will be equal things.
I feel they should have focused on improving your education for the large part of our population, because education is the key to knowledge and not being taken advantage of. Government did away with trades many years ago. Companies used to be incentivized to train tradespeople, and that's disappeared. And I feel that if people had the ability to work for themselves, they can feed their families.
I'm aware that what I would say would sound easier said than done. But the truth is to put monies back in the pockets of the common man. For example, small businesses. Small businesses still need to go through a lot of processes. Yes, the government has tried in a little bit of that to mitigate their taxations or how long, but then it's still a huge lot of things. With cases of power outages, situations of unemployment, things that have to do with high cost of transportation, a situation whereby there's free education, free transportation, free healthcare, and zero taxes for businesses until they attain a certain level. This will be ways to save money and, like I said, put monies back in the hands of these common people. That way they will be able to, in a little way, bridge the gap in the obvious inequality, like I would like to say.
Well, joining me now to take a closer look at inequality in Africa are from Johannesburg, Michael Sudakasa, economist and chairman of the Africa Business Group. From Lagos, Dr. Muda Yusuf, CEO of the Center for Promotion of Private Enterprise and former Director General of the Lagos Chamber of Commerce and Industry. And from London, Reginald Kadzutu, Financial and Economic Analyst and Chief Executive Officer at Amana Capital Limited. Gentlemen, welcome to the program. Reginald, if I may start off with you, because let's begin by looking at available statistics. According to Oxfam, Africa is the second most unequal continent in the world and home to 7 of the most unequal countries. Paint for us a picture of the realities of the inequality gap in Africa today.
Thank you, Beatrice. Inequality on the continent of Africa is primarily because of the rate of growth of return for the different factors of production. So in an economy, you have capital, you have land, you have entrepreneurship, and you have labor. And if you look historically for the last 20 or more years, capital has been rewarded. People that own land have been rewarded. Case in point, Kenya, where land prices can double and triple. A few entrepreneurs who have actually come up with either businesses or ideas to the market have also been rewarded. Case in point, the technology side of the continent, if you look at the digital payment platforms from Nigeria, from Kenya, from South Africa. But the problem that we have is that majority of the only source or factor of production that most people on the continent own is labor. And if you look at real wage growth on the continent, it has actually been negative for the last 10, 15 years. So as long as labor is not rewarded, the gap between the rich and the poor becomes bigger, even as economic growth increases, because it's only rewarding those who own capital. So if you go across the spectrum of the continent, as long as we are still a labor-intensive continent, this problem is going to continue remaining.
Michael, now according to the World Bank, Sub-Saharan Africa now accounts for 60% of the world's population in extreme poverty. Why does inequality seem more pronounced in Africa?
Africa is still trying to recover from the economic doldrums of the COVID-19 period. We were able to get through that period with far fewer levels of mortality than some other parts of the world. But the shutdowns on the continent, the shutdowns in the world really constricted our economies. We started last year and early this year to rebound, only to be immediately met by the impact of the war that's happening in Ukraine. So our economies have not really moved. The beneficiaries, if you will, of the opening up of the world have been a much smaller community of economic actors on the continent. And so the proverbial rich getting richer has happened because that community of actor has had access to capital, has had access to the markets, while most on the continent have been still hampered by, one, inflation. Currencies on the continent over the last 6 months have all declined to the value of the dollar, so things are more expensive. And we are an agriculturally based society, and so we haven't had necessarily the ability to trade our way back into economic growth. And those who've had capital have been able to invest if they wanted to and improve their positions, particularly as the relative worth in terms of assets in local currency has gone down.
But Michael, we still see that South Africa is ranked as the most unequal country in the world.
And South Africa still very much is grappling with what I'll call its apartheid hangover. The wealth in this country is really still in the hands of the ruling party before the '94 elections. There have been different efforts, broad-based Black economic empowerment, efforts to create a more inclusive society, but they haven't really achieved what I'm sure the late President Nelson Mandela had hoped. So you still have roughly 10 to 15% of the economy, of the population owning the majority of the economy. That keeps South Africa separate and quite unequal.
So, Dr. Yusuf, prior to the pandemic and for about 2 decades, African economies had strong and consistent economic growth. But looking at the inequality statistics today, it does seem evident that the human development and poverty indicators did not progress as expected. Why not?
It boils down to, first, the fact that economies on the continent are not inclusive economies. Secondly, also to some macroeconomic management issues, the structure of government spending. There isn't enough expenditure on social sector, expenditure on education, expenditure on health, and taking care of the environment. The emphasis is not much there at the governance level. Then, of course, the macroeconomic management in many of the countries on the continent also contribute a lot to this problem of poverty and the widening gap. For instance, issues of high inflation, issues of inappropriate subsidies, which channel resources into wrong places and benefiting the wrong people. All of those things create very serious issues for the poor, particularly from the point of view of the purchasing power, the erosion of real incomes, and all of that. So all of these things, contribute a great deal. Then in many of the countries also on the continent, there are issues of trade openness. Many of them are not very open to issues of trade. And trade, has a way of creating competition and improving welfare and creating more jobs.
So, Reginald, let me get your view here as well, because it does seem that there are many factors that are affecting inequality and poverty across the continent. But from an economic and development standpoint, why exactly does inequality matter?
Inequality matters because the whole purpose of running a country, the whole purpose of structuring economy is to uplift people from poverty. And you are not able to do that fast enough if you do not have upward mobility from your lowest income earners, and they do not have upward mobility over the years. So if you look, example, at China, what China has been able to do is to uplift a lot of people that were considered poor into middle income class kind of people. So inequality becomes important in Africa because then our structure of our economies, yes, it is giving us economic growth, but that growth, as Dr. Yusuf has said, is not inclusive. And the only way you can measure whether your growth is inclusive is looking at the gap between the richest and the poorest in terms of either income or in terms of wealth. So if we're going to have higher standards of living, sustained economic growth, less conflicts, less crime, less vulnerability to curable diseases, then you need to lift up a lot of people from poverty and reduce that gap between the rich and the poor.
Dr. Yusuf, let me get an example from Nigeria, being one of Africa's larger economies and, of course, being the largest oil producer here. What would you say are some of the issues that have contributed to Nigeria's crisis in terms of poverty levels? Because we understand that half of the Nigerian population is still living below the poverty line, still living in extreme poverty.
I think the critical factors are structural factors, because for many of the SMEs, productivity is very low because of the state of infrastructure. Infrastructure deficits in Nigeria is very, very, high. One of the highest that you can find on the continent, which affects productivity of small businesses. Secondly is the macroeconomic management. Just as I said, inflationary pressure is extremely high. Current inflation now is about 22.5%, but effective inflation, at least in the last 1 year, has been as high as between 30 to 50%. So inflation erodes purchasing power. It leads to a collapse of real income. So the inflationary situation is a key problem. Problem of insecurity is increasing in many of our agricultural communities. And don't forget, agri accounts for almost 50% of our labor force. Unemployment is about 33%. Poverty incidence is about 42%. So we are dealing with people living below poverty line of almost 90 million people. Then, of course, we have the problem of climate change.
Right.
Only recently, we are having very serious issues of flooding. So that again is also creating a whole lot of challenges. Then you have cultural problems, inappropriate investment in the social sector, in education and in health. These are some of the factors responsible for the poverty we are grappling with in Nigeria.
All right, gentlemen, we are going to take a short break now, but when we come back, we'll look at some possible ways inequality can be addressed on the continent. To stay with us. Welcome back to Talk Africa. Still with me are Michael Tudakasa, Dr. Muda Yusuf, and Reginald Kadzutu. Before the break, we looked at how inequality is affecting people across Africa. Let's now look at some ways this can be addressed. Dr. Yusuf, income inequalities often translate into inequalities in accessing even basic services and getting lower opportunities to get out of the poverty trap. What impact is inequality going to have in the long term on sustainable development?
Well, inequality obviously creates a lot of social problems. It leads to social unrest, it leads to conflicts, and it also creates some other social problems such as criminality. So the more we have a crisis of inequality, and the more we have chances of social instability. And social instability sometimes can also lead to political instability. It leads to social discontent. So it affects a whole lot around the social, sustainable development goals, whether we are talking about poverty, we are talking about education, we are talking about health. So in order to move forward in all of these areas, we need to look at the key variables in the social sustainable development goals. Issues of climate change, issues of education, issues of health, issues of the environment, issues of investing in infrastructure, and committing a lot more to building an economy that is inclusive and promoting the policy of value addition. Many countries on the continent are exporters of commodities, raw materials, very little value addition, which is creating problem of exclusion within the economies on the continent.
So, Reginald, some African countries are looking for ways to address this issue. And I'll take an example of Kenya, where the new president is putting in place a bottom-up approach to combat inequality and raise the poorest people in Kenya out of poverty. Has this already been implemented, and how is this exactly projected to work?
And unfortunately, I think there is a very thin line between campaign rhetoric and economics. Bottom up is a good cliche, and I think from his first 1 month, 2 months in office, you can realize that the talk has changed from bottom up and to more of business as usual. Electricity prices have gone up 2 times in 1 month. Fuel prices have gone up. So I think that the best way to implement, and one thing that they have mentioned, which we have not yet seen them implementing, they implemented in part the aspect of giving fertilizer, subsidized fertilizer to the agricultural sector, and they've mentioned the agricultural sector quite a lot. If they actually follow up on that, then they might be actually heading in the right direction. Why do I say so? All the industrial revolutions that have happened in the past, whether it is in the US or in the Great Britain, or even as recent as China, India, and Vietnam, all start by improving the agricultural productivity of that country. When you have 70% of your people in the agricultural sector, the growth of the agricultural sector ideally will make all other sectors begin to grow. And as long as we have a majority of our people in the agricultural sector, and we are not pumping in funds into the agricultural sector, on the continent, there are only 2 countries that are actually putting more than 10% of their budgets in the agricultural sector. The rest are not putting even up to 5%. For
Right.
example, Kenya have been putting only 4% to the agricultural sector. Yet our manufacturing sector is 100% agro-processing. So African countries have been trying to jump this phase and trying to create industries which are not supported by a base of the agricultural sector. You start adding value to your cocoa, adding value to your cotton, start adding value to your tea. You see that the industries that you are now creating are not subsistence industries, but you are now on secondary industries that have higher income. So as agriculture starts releasing labor, and to these industries, you find incomes also start increasing.
So when we look at countries, though, that have successfully raised their populations out of poverty, China is one that, comes to mind. What are some policies that the Chinese government has implemented to do this, and what lessons can Africa learn from here?
Well, one of the key lessons for me that China benefited from, which means I'm not 100% sure that it was just China's policy, but China's policy supported it. In the 70s and 80s, China became the world's manufacturing hub. So they benefited from decisions made in Detroit, Michigan, in Paris, France, where large companies that manufactured in their country said, you know what, let's manufacture our products in China. So China had the benefit of not only investment, but also IP training, capacity development, which it leveraged. Africa hasn't had any kind of Marshall Plan or any kind of equivalent investment push from outside. But definitely on its own, China embraced agricultural development, embraced energy development. One of the things that I think really hamstrings the continent now is the fact that of the roughly 1.2, 1.3 billion people, half do not have access to electricity. It's very difficult to move from an economic development standpoint without access to electricity. So China invested in not so much urbanizing its rural communities, but making sure that they had basic infrastructure so that you could create economic activity in those regions. That's something that in many instances we have not achieved yet on the continent.
All right, so I want to get your final thoughts, and I'll start off with you, Dr. Yusuf. What kind of policies do you think would need to be introduced in the immediate term to address the inequality gaps and ensure that the poorer segments of the population can overcome their disadvantages?
I think what is important to ensure that we address this issue is to address the issue of small businesses. Small businesses, there are very many in Nigeria, for instance. We have over 40 million of them. But unless we create the enabling environment, address investment climate issues, apart from the macroeconomic issues, which affect a lot of them, we have issues around business regulation, issues around infrastructure, issues around the situation with the ports, issues around the barriers to trade within the sub-region and even within the continent. So policies around ease of doing business is very critical to ensuring that we reduce the level of poverty. Policies around investment in infrastructure to reduce cost of production and to increase productivity across all sectors is very important. Then a lot of the countries on the continent are agrarian economies. So building a very strong agri value chain, strengthening the value chain of agriculture, not just concentrating on the primary production. We need to be looking at preservation, we need to be looking at processing, packaging, export, and all of that. Strengthening the agricultural value chain and even the value chain of many of the resources that we have on the continent. I think we focus a lot more on that. We'll be achieving some concrete results.
Well, Michael, I want to get your final comment here. In your view, though, and in trying to eradicate extreme poverty and bridge the inequality gap, what kind of policies would need to be introduced to address that inequality gap?
Well, one of the things that we have not adequately embraced on the continent, to me, is the idea of private sector development, educating young people to become effective entrepreneurs, as opposed to grooming our school leavers from high school and onward to look somewhere else for a job. So we need policies that support innovation. We need policies that support educational development around entrepreneurship. We definitely need policies that focus on public works development of key infrastructure that you need to build your economy on. I've mentioned energy, but also roads, rail, transport, logistics. We're in an era where we have, as a catalyst, the African Continental Free Trade Area and the agreement that supports it. But we can't trade with one another if we can't physically get there cost effectively. So we definitely need harmonization policy. These are things that the African Union and the regional economic communities have worked on, but we really need a push to implement those. The trade is a tremendous catalyst for economic growth in this next few decades. And one has to remember that we'll have a market, but we need to have thought about the companies that need to be created to fulfill the things that that market will need and move in that direction. So these are some of the policies and some of the strategy areas that we desperately need.
Reginald, your view?
I think what needs to be done is to increase the agricultural productivity on the continent. We are an agricultural continent. The average for sub-Saharan Africa is value added per worker is $287 compared to $47,000 for the US, $37,000 for Japan, $30,000 for Belgium and Canada. So until we can increase our agricultural productivity or value added per person on the continent, then we are not going to see incomes increasing or mobility, upward mobility for people who are poor, getting to middle or even to become richer. And one of the things that needs to be done to help agricultural productivity, one is mechanization. Most of agricultural land on the continent still depends on the blessings of God for rain. If it does not rain, then we are in trouble. Most of the farmers on the continent are small-scale subsistence farmers who cannot benefit from economies of scale in agricultural insurance because of their small size. So there needs to be a lot of land reform on the agricultural side of the continent. And then there needs to be supported by fiscal policy to make sure that a larger percentage of budgets go to the agricultural sector. And you realize in the next 10, 15, 20 years, we can start seeing a different story. But if we decide that we want to ignore the agricultural sector and build roads to nowhere, railways to nowhere, and factories that literally can't sell to anyone, then you realize as a continent, we will not actually be able to bridge the inequality gap, not among us just ourselves, but with the rest of the world.
All right, gentlemen, thank you very much indeed for your insights. And that's all for this edition of Talk Africa. A big thank you to all our guests. Michael Tudekasa, economist and chairman of the Africa Business Group. Dr. Muda Yusuf, CEO of the Center for Promotion of Private Enterprise and former Director General of the Lagos Chamber of Commerce and Industry. And Reginald Kadzutu, financial and economic analyst and Chief Executive Officer at Amana Capital Limited. Remember, you can be a part of this conversation online through our social media handles on Facebook and Twitter. You can also catch the show on our YouTube playlist. Do keep the conversation going and join us again next week for more Talk Africa. For me, Beatrice Marshall, and the team here in Nairobi, until next time, it's bye-bye.